and let's get a fundamental view of what the outlook for equities is. We've got Sandeep Sabharwal, who's the Chief Executive Officer for the Portfolio Management Services business at Prabhudas Lilladher, joining us on the show. Sandeep, first up, Infosys dragging the market down. How are you expecting IT results this first quarter to pan out?
So the expectations from the IT results have been muted because I think most of the companies across the quarter have been guiding that things are not as rosy as what they were expecting earlier. However, what we've seen is that Infosys has been able to beat even the downgraded estimates, and their outlook for growth also has become uncertain because they have suddenly turned around and stopped giving quarterly guidance. So which reflects I think quite negatively on the near-term macros as far as IT industry is concerned. Now, whether it's company specific or it's going to affect the overall industry, we'll get to know over the next few days. However, I think what we also saw was that Cognizant, which remained quite bullish for some time, again came out and downgraded their estimate the last time. I think it was last month. So I think all of us know about the global scenario, all of us know that the uncertainties which abound. And to that extent, I don't think the results are going to be very exciting. And now it's more a question of how long it takes for things to stabilize and improve.
Okay, and markets continuing to nosedive as we speak. It's 52.34, so that's already 1.5% off for the Nifty. For the Sensex too, it's 17,239. Let's also pull up the banking index, find out how the IT index is doing given the strong weightage that both of these have on the overall index, which are taking a nosedive. And as we speak, you can see the overall market sentiment which is coming under pressure. And broader markets too not being spared. So as we speak, both the mid and the small cap index are down by 0.7%, and you've got the market breadth which is dangerously in favor of the losing side. But Sandeep, given the way the policy decisions have not really been taking off, the way monsoon is panning out and expectations from the RBI, how do you expect the markets to trend? Is that fear of 4,800 on the Nifty looming large?
I personally wouldn't bet on that because I think the downside risks for the economy have reduced significantly given the way commodity prices have eased globally. And we've also seen that most of the macro events which are affecting the markets, I think we've seen a peak of those events happening and to some extent I think we could see stabilization coming in terms of the global news flows. Now it's on the policy front as it is, no one was expecting anything to come through before the 19th of July, before the presidential election, and we'll have to watch how things go after that. So I think positive policy action both on attracting FDI as well as on maybe fuel price adjustments, a lot of other fronts like boosting infrastructure investments, etc., could actually go a long way in increasing the outperformance for India going forward. Because clearly now what we see globally is that economies are facing deflation. And in a deflationary environment, an economy which actually has inflation and which can actually grow is a positive investment attraction actually. So I think there is a huge leeway for India to actually attract money inside. But I think the money has to be felt welcome, and we need to create the proper environment for that money to come in. And for that we'll have to watch what happens in the months starting 19th of July.
Right. Now, Sandeep, just looking at how banking results could play out, we've already had two sets of numbers out. IndusInd Bank, which were a good set of numbers. HDFC's numbers came in line with what the market was expecting. But going forward, when we have the public sector banks put out their numbers, would you say that's when you'd start getting worried?
I think a lot of the worries of the public sector banks is reflected in the stock prices of these companies which are trading at levels which are significantly below the levels at which they were trading maybe a year back. So I think the worst of the asset deterioration fears I think are already in the prices, and I actually expect that financials will outperform the market significantly in a big way, because if you see the markets and in terms of the weightages in the index, I think IT and financials are the two big weightages, and typically both of these sectors don't do well at the same time. And I think IT is the sector which I think is going to underperform, and financials are going to outperform, because one, the rate view is that the rates have peaked and interest rates have to come down going forward. And my base case view is that given the way the central bankers across the board have cut rates, we could see that RBI will also be forced to act in the coming policy, and that will also be incrementally positive for banks. And most of the banks have been reporting healthy results. Even last quarter results, people are expecting that the bad assets will play a big role in the results which will come out. But broadly, results were pretty strong across the board, both public and private. But still, my personal preference is for private sector banks. But I think across the board, we could see decent results.
Wait on IT, bullish on the overall banking sector. What are your top stock ideas then?
We are underweight on IT, and the only stock we are holding is Infosys, unfortunately. But I think at this valuation, we propose to continue to hold. However, we are heavily overweight on financials, and our top holdings are ICICI Bank, IDFC, and Axis Bank. And I think we'll continue to hold these because we believe that there is value proposition in these stocks, and they should do well going forward.